Hi, Matt McAleer, Director of Equity Strategies at Cumberland Advisors. March 8th, just after the close. Interesting week, little pullback in the U.S. markets. We have been focusing the last 2 or 3 or 4 weeks on our video series about the high weekly momentum readings we were getting in the U.S., up through 90%. As we discussed, when we get through that 90% number, the oxygen starts to get a little thin in the market. Markets often have to reset themselves. Doesn't mean the markets have to fall apart. Just have to reset themselves, create a level where demand kicks back in. So we've seen that the last 5 or 6 trading sessions. And we've been flattish for, call it, 2 weeks. How did we prepare for this? In our US ETF strategy, we did let go of some of our Russell 3000 exposure. We had been, over the last 3-4 months, heavy in small and mid cap. We want to start to reallocate some of that capital towards large cap in this pullback. So we're currently sitting at 16-17% cash in US, with an eye on large cap, specifically technology, and perhaps adding a bit to our healthcare position, specifically medical devices. I mentioned last week, my concern there is that trade may be getting a little bit crowded. 8, 10, 12 months ago, I didn't hear anybody talking about medical devices. This week, I heard 3 different analysts talking about it. That's a concern to us. Tactical Trend had a new position this morning into the weakness. Bought the equal-weighted technology ETF, RYT. That was an 8% position, took it up to 10. Nice level that I think will provide reasonable risk-reward going forward. Interest rates. Another wild week in foreign interest rates. As we've discussed previously, we are under the impression that foreign rates are having a direct consequence on our U.S. rates. Germany back under 10 basis points in the 10-year bond. Some of our clients and some of our friends complain about rates here in the U.S. Could you imagine getting 8 basis points, 8/100th of 1% for 10-year paper in Germany? It's difficult for me to think of a scenario where we're going to have runaway rates, runaway yields in a environment that foreign taxable paper is at that level. Keep in mind, Japan's still at 0 or below. So it'll be interesting. We are trying to find value on the taxable and muni side. Muni value is still holding up. Still looking at, if we compare apples to apples, 25-year taxable paper versus 25-year tax-free paper. It's one of those odd times in the cycle where you're earning about 60, 70 basis points more in munis, and that's before the taxable equivalent. So I know we've mentioned it for 5 or 6 months here, and it may be starting to become repetitive, but we still find a lot of value in the muni market. Let's see what next week brings. Everyone have a great weekend. Hi, Matt McAleer. Wanted to invite all of our clients and friends that may be in the greater Southwest Florida area to our Financial Literacy Day, April 11th at the University of South Florida, Sarasota, Manatee. It's a great conference where we cover equity trading ideas, allocation ideas, fixed income ideas, broad market, both domestic and international ideas, lots of Q&A with the audience. And this year our keynote speaker is Gretchen Morgensen. Everybody knows Gretchen from the Wall Street Journal. We hope that you can carve out some time, April 11th, to join us. Be a fun day.